Dear learners, welcome to Management Accounting course. So I'm going to give the overview of Unit 1, that is Introduction to Cost Accounting. In this unit, you're going to learn about what is cost and what are the different types of costs and what is cost accounting and cost accountancy. And you're going to learn about unit costing and preparation of cost sheet, how the cost sheet is prepared and what are the use of preparing the cost sheet. And you're going to learn about tender and quotation. As you all know, various companies, various governments, they call for tenders, and if the company want to participate in the tender, they have to apply through quotation. Quotation is nothing but estimated cost sheet. So they're going to learn about what is estimation cost sheet, and lean accounting is one of the very important and significant topic in the current world we're going to discuss. Let me throw a few light, give a brief introduction about each and every topic you are going to learn. Cost accounting is nothing but it's a process begins with the recording of expenditure or the basis on which they are calculated and ends with the preparation of statements for ascertaining and controlling cost. And what are the objectives of cost accounting? One is, first of all, ascertainment of cost, then cost control and cost reduction, then guide to business policy, determination of selling price. Advantages of cost accounting: helps in identifying unprofitable activities of the companies, losses or inefficiencies in any of the form, and then application of cost reduction techniques, operation research techniques, and value analysis technique, and provides relevant information for taking decision like pricing decisions, profit planning, make or buy decision, or whether the company want to outsource its operations, etc. So difference between managerial accounting and financial accounting, everybody should know. Financial accounting is mainly published financial statements and other financial reports, which is mainly prepared for external users. Whereas managerial accounting is information for decision making and control of organizations, operations. This is mainly for the internal users only. Now we will look at what is cost and different elements which are involved in cost. In business, cost is usually a monetary valuation of efforts which are put by the employees and the management, material which is used in the production process, and the resources which are used in the production and services and delivery, and time utilities consumed, and risk incurred, and opportunity foregone in the production and delivery of goods and services. So what is cost? A cost can be defined as the amount of resources given up in exchange for any goods or services, like material cost, labor cost, electricity cost, fuel cost, etc. And one more cost, what we normally come across is capitalized cost, the cost incurred on fixed assets and capitalized cost. And these costs we're not going to consider when we are doing that. So costs incurred to purchase machineries, these costs are not covered here, except which is subsequently treated as expenses like depreciation. Cost classification: the cost is being classified under various heads. One is called by elements, by function, by direct, indirect, by controllability, by normality, by variability, and relevance. We'll look into that each of find cost classification briefly. Elements of cost: cost is classified into material cost, labor cost, and expense cost. By function, we divide the cost into production cost, office and administration cost, selling and distribution expenses, or marketing cost. And by cost as per se, it has been divided into two types. One is called direct cost and indirect cost. Direct costs are those costs which can be easily attributed to a particular cost center or a product. Example, the cost of fruits in a fruit pulp production. And indirect costs are the costs which cannot be directly assigned to a particular cost center or a product. It is a common cost. It needs to be apportioned in order to assign to a product or department. Costs incurred by maintenance, support staff, wages paid to security staff, shortage of cost of units produced, etc. is an example of indirect cost. Controllability, there are various costs which are controllable and which are uncontrollable costs. The costs which you can control are the costs which can be influenced by an action of a specified member of undertaking. Uncontrollable costs are those which are not controlled by the company. And the other classification is normality. We are going to discuss about what is normal cost and abnormal cost. And by variability, we're going to learn about fixed cost and variable cost and semi-variable cost is very, very important types of variability cost, which are very much used in budgetary control system. And opportunity cost is the cost of opportunity lost, the cost of selecting one course of action in terms of opportunity which are given up to carry out that particular course of action. And marginal cost is the cost incurred to produce one additional unit. And product cost is incurred to make or manufacture particular product or sell it. And these are also known as inventoriable cost. Okay, that is what we are going to discuss in depth. And coming to the elements of cost, the cost, as we just now I discussed, the total cost is being calculated by adding direct and indirect cost. And direct costs are nothing but the direct material cost, direct labor cost, and direct expense cost. Indirect cost are indirect material, indirect labor, indirect expenses. So when we add all the three direct costs, we come across the cost which is named as prime cost. And the overhead cost is nothing but the aggregate of all indirect material cost, indirect labor cost, indirect expense. It is known as on-cost expense also. So overhead cost, and they are also divided into again, the overhead costs are divided into again production overhead, office administration overhead, and selling and distribution overhead. And price quotation and tender, as you all know, whenever the government is calling for tender or the private companies are calling for tenders, if the company want to participate, it has to prepare a quotation. So you are going to learn about how to prepare this price quotation and how to submit that quotation so that you'll be able to get the tender. So these are the references what you can use. One is the online course material is being available. You can download and read that, and then you have a textbook that is by Arora MN by Accounting for Managers, published by New Delhi Himalaya publication. So thank you, students. So I welcome you all to learn the unit 1 and learn about cost accounting in more depth by attending the online classes and offline classes. Thank you very much.